All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Looking forward to this start of the new challenge here tomorrow. And, as I've been preparing for it, just doing some of my homework, building kind of the watch list that I want to use here for it. There's a few stocks we'll go out and take a look at, but a few things I kind of want to show you here with it. Number one, I think you're going to see a little bit of difference in a few of the things that I trade, as I am looking to trade the SPY significantly more. Why do I say that? Well, we now have an implied volatility where the options aren't insane. Yep, the VIX has jumped in the last couple days, but we're not dealing with this IV that February, March, April, where we sat at. So we're sitting at a lower implied volatility, but we're also still dealing with an average true range in the market that's a little bit higher than what it was back here in October, November, December. So, it's one thing to have the options cheap, but if the market's not moving, who cares, right? If the options are cheap and the market moving, that's the right recipe. And I think we're in that kind of nice balance period right here where we can expect enough market movement, to go with what the price of the market options are, and kind of the first time in a while that I kind of see that, and it's one of those where where I expect as we start to get to the end of August and into September, October, the volumes in the market are going to pick up. We're going to start to see some heavier volume bottoms and heavier volume tops that are a little more playable than what they have been in a little while. And so I do expect that this challenge, I have some more market plays associated to it, which I've really kind of shied away from for quite some time, as just simply either not enough movement or the price of the options are insane. And so we'll be looking at that. One thing that's really nice about trading something like a SPY or an IWM or one of the market ETFs is the liquidity is great. It's easy to get in, easy to get out. Now the price of the options changes from second to second, so it's a little harder to hit that pause button, right? That elusive pause button so that everybody else can jump in. But generally, around midday, that's not, too big of an issue. And, if we don't have that issue as far as, too much movement, we'll be looking at that. So that's one of the small changes that I'll be making. You'll probably see a few more, SPY trades here from me as we go forward this quarter. I also suspect that we will have a few more put opportunities, come to play here over the course of the next several months. Now, if the market vibe is bullish and, most stocks are going up and we're just in this kind of ping pong differential period, I'm not going to sit there and force puts. But if we start to see the market vibe turn down, we start to see, a little more sell pressure in the market, there are some stocks that I think are really interesting put candidates. Last week we talked about Home Depot, just in terms of the short-term chart. But when we look at something like Home Depot and we see margins, starting to flatten, here for the company, yes, their revenues continue to grow and they continue to be really strong there. But we're starting to see margins really kind of flatten out. And over the last several years, the margin growth is really what has helped push Home Depot higher. So, okay. We start to see the market itself turn down. We start to see, a little bit of turn down. This is one I wouldn't mind playing that I'd like to have on that downside and is on the downside, part of my watch list. And, we'll definitely be looking for. But overall, when I look at the landscape and I look at the dynamics of the market out there, it's still bullish. The bulls are still in control in the long term, short term, midterm. Maybe you could argue over the last, few days they're not as much in control. But over the course of a monthly, weekly type of chart, and looking at the overall fundamentals, economic data, earnings landscape, the bulls are absolutely still in charge. And a correctioning isn't going to change that. So my overall bias will need to continue to be, overall bullish. And, we'll keep that. And there's some stocks that I think are, all right, yeah, they could have some oscillation, some up and down during the quarter that I'm going to watch. And if I get a chance to play them because of a signal, I'm going to take it. Apple, definitely on that list. If I get a chance to play it, I'm going to take it. I'm not just going to go buy it any day just because I feel like it. But if I get a nice little setup, I will go and take it. But there are some stocks out there that I think are significantly different from what their real value should be. And in that class of stocks of where I look and I say the value of this stock is not where it should be, there are a couple that I kind of say, okay, let me go take a look. One of them is Alibaba. Now, long term, I'm very bullish on Alibaba, and they've gotten wrecked here of late, and rightfully so with some of the trade war stuff and everything else. And you can see the weekly chart and just this long consolidation that now has been here for Alibaba. But this is a stock where I look at everything that's going on, and I expect that in 2019 or 2020, this stock's trading up into the 300, 400 level, and in best case scenarios could be in the 600 to 800 level. I'm not saying, boom, I'm going to buy it and expect it to go there, but best case scenario, I would not be surprised to see it up at those levels with the revenue growth that it continues to have. Now, there's some concerns over China and economic data and, currencies and all that are creating some short-term pullback. But I think ultimately that's going to be some, opportunity over the course of this next 4 months for when Alibaba does turn, that there is a lot of room to the upside to be played. And so this is one of those in that class where I go, this is severely undervalued right here compared to what it would be without just some of those macro headwinds. And I know I can't just go buy it in the face of those macro headwinds, but if we start to see those diminish, we get a technical signal, I will definitely be looking to trade Alibaba to the upside. Another one that I look at and I say, okay, we're not to what the real valuation on this should be. I look at JP Morgan, and 120 to 130 is where, given the overall economics, given the overall earnings, where this should be. And we have had, the reason it hasn't gone is because we've had fears over the yield curve, which have been priced into the market, and fears over the global economy. And, if the global economy goes down, well, JP Morgan's not going to do too well. But this is one that has given, to me, this same type of weekly action as we saw back here in May and June of 2017. And you can see it, consolidated for about 2-3 months afterwards before the next big move. And so I like JP Morgan higher, but I am concerned that there's consolidation. And so what you'll see from me during this challenge is not so much applying trend signals to JP Morgan, but more oscillators and looking to buy it on some of the dip days and to sell it on some of the rip days as we go through the next several weeks here. And if we'd be fortunate enough to see a little bit more pullback in JP Morgan, I think ultimately that would be a very nice buy situation. Indeed. So JP Morgan there. And then there's some where I put in and then there's Valero. And Valero here is a stock that, in the refining space, this is one that I hate to use this word because when I do, I always get an email saying, hey, Jeff, I want to play the buyout. How do I play it? You don't see me play buyouts. I think playing buyouts is a fool's errand, is a fool's endeavor. I don't see any value there. But when I'm bullish on a stock and I do think there's a potential buyout, I'm a little more eager to play it. And Valero's one of those. And this is one that's just been in a really nice, bull market, finally has had a little bit of pullback, had that nice shot up, and has been consolidating here on some very, very low volume. And it's one that I do expect to break to the upside, and I do expect new highs, to come into play. And I think 140 is kind of the logical next target for it, given what its fundamentals look like. We're talking about earnings per share growth next year of about 55%. So it's going to be one of the highest growth stocks out there. And let's face it, it's kind of a little stealthy here overall. It's trading at a forward PE of 11, so yes, the stock's gone up a lot, but its valuation is not stretched, to a great degree. And in fact, it has a book value of 50, so it's only trading just north of 2 times its book value. There's a little bit of a dividend on it, just under 3%. So, that doesn't really matter all that much. But this is a stock where, to look at it at 140, say, hey, fundamentally, it's still pretty good. Yeah, absolutely. And it's got about a $50 billion market cap right now, so it would not be a cheap acquisition. But I would not be surprised if over the course of the next year, we don't see a big integrated oil company like an Exxon, like a Chevron, like a BP, someone who already has refining exposure, step in and say, hey, can we grab some Valero and add some growth to our bottom line? And so Valero is one that I think has significant upside potential overall. It can be a wild one to trade, but we'll be looking for opportunity to take gains and to throw it into Valero and to really kind of ride some of the trending nature that this stock has to offer. It's currently in this little consolidation mode, which for my current Valero doesn't help me all that much, but I do expect that ultimately it will resolve strongly here to the upside, and it doesn't need oil to go up. This is not something that has anything to do with the price of oil. It has much more to do with the crack spread, the price of oil versus the price of gas, and that's ultimately what drives Valero. But even if we don't see improvement in the crack spread, the fundamentals are solid here when it comes to Valero. So that kind of goes into that class with JP Morgan, with Alibaba, where I look and say, man, this stock here is not trading where it should be. And we can say, well, why is it not? And blah, blah, blah. And there are reasons. But if some of those reasons start to come off a little to see a sizable move, I think could easily happen. Now, there's another class of stock out there that I think is fairly valued. Micron. And, I got some heat back here in March when I said, hey, you know what? Stock's probably topped out. When we looked at it in May, hey, you know what? Chances are slim that it's going higher, right? And it's one of those stocks the analysts like to put, these massive price targets on and everything like that. But if you've traded Micron over the years, you kind of know how the stock tends to work. And one of the things about the stock is it tends to consolidate a little bit during this time of year. And then during September, October, November, December, January, February, this stock tends to do very, very well. And so it's coming off of a pullback from 64 down to 51. I mean, we're talking about a 20% pullback, right? Some people would call it a bear market for Micron. But we're talking about a 20% pullback. We're coming down towards this 200-day moving average. This isn't something where I want to be entering right here, right now, but this is something where if we start to see it skiff off, or we start to see it maybe exhaust with a little bit of selling down here in the 47, 46 area, and we get a little bit oversold, to see it make another move in March as we get into September and October, I think is very realistic when it comes to Micron. Now, Micron's also been held back a little bit by some of the trade war fears and that type of stuff, and how's that going to affect them and the intellectual property rights. Also some Intel, no CEO at Intel. What about Micron's joint ventures? It's also had a little bit of pricing issue in terms of, DRAM and flash pricing, not appreciating the way many analysts have expected them to appreciate. So, there are reasons why the stock has come down and reasons why the stock has pulled back, which is great. But this isn't a stock that I think, wow, this should be a $70 stock, or wow, this should be a $35 stock. I think down here about 50 is a good value for this stock. It's not overvalued, it's not undervalued. It's kind of in just that kind of right spot. And so for me, I don't look at it in the same way as Alibaba or JP Morgan, but I look at it and, okay, we start to see it run. All right, let's go. This is one where show me you're ready to run, and let's go. Until then, I have to be, pretty cautious. And there are a few stocks in that category here for me where I look and say, hey, you know what? Show me you're ready to go, and I'll play you higher, because I think there's reasons you could go higher. But I also think there's some nice reasons why you could go lower, and one of those being FedEx. Where this is one where there's plenty of reasons for it to go higher, plenty of reasons for it to go lower. I think it's pretty fairly valued right in this area. But it starts to run, could be a very nice opportunity. Another one is Honeywell in the industrial space. This is one I like very much, and I think Honeywell actually goes to new highs. But if we look at it fundamentally, the argument is that, hey, about 150, 152, that's its real value. It's trading at kind of some of its historic metrics and trading at a fairly normal price for what its fundamentals look like. So this is one where I'd want to see the signal come in, get the signal, and I do think there's a potential to run in a bullish type scenario. So, most of the watch list that I look at for the challenge here has this type of name: the Honeywell, the Micron, Microsoft, who I think is very fairly valued right here. In fact, I think it may be a little overvalued, but for just reasons. As we go forward on this challenge, I think the application of trend measures into some seasonally strong movers is going to be the way to go. And outside of that, it's going to be with some of the JP Morgan, some of the Microsoft, some of the other names that we've talked about. I think it's going to be one of those where it's about some of the oscillators and some of the shorter-term hourly charts and the bounces and the volumes. And so that may mean a few quicker trades, where I'm talking about a trade that lasts a day and a half to 2.5 days type of thing, rather than looking for a bigger trend. There's still going to be a lot of trend emergence out there, but in terms of how things are priced, where things are right now, and some of the fears that are out there, I do think over the course, especially early on in the challenge, that's going to be much more about trading oscillations, but later on in the challenge could be a lot more about trading trends. Okay. So anyway, that's just a little preview here. If the challenge were to start today, there's not a whole lot that would really intrigue me too much. Some of these stocks like a Microsoft have a decent risk reward. If you want to play it to the downside with stop on today's high, there's quite a bit of setup like that, but it's not a highly probable setup in my book. So it's one that I look at and say, okay, I'll let it go and see where things happen. But it's one where if we're probably going into the close on the challenge starting today, I'd probably wait until tomorrow to make any kind of trade decisions, as I don't see a lot of directional signals coming in. I do see still some heavy flush risk this week, and we'll see how that mounts. I don't expect that we'll see too much more selling today, but the one thing about the Turkish situation, for as much as I may say, hey, in the long term it doesn't matter, in the short term it's in escalation mode, meaning the situation is getting learned and identified and realized and believed by more and more people. And until we get to that mode where everybody knows, everybody's worried about it, it's all priced in, that Turkish situation can still escalate. And right now we're still what it looks like in the escalation phase. On the de-escalation phase, this is where, everybody that jumped in late kind of says, oh, well, what about this? What about this? What about this? As they're kind of getting solved, we start to see it de-escalate. And I do think this one will go through that escalation, de-escalation phase a little bit quicker. But as we talked about last week, that still could be 3 to 4 days, even on a quick escalation, de-escalation cycle. The market vibe here today, not a ton of movement. If we take a look at the bullish percent index, you see not a lot of movement in it, nowhere near any type of bearishness. If we look at the number of stocks trading above some of the major moving averages, so if we just go take a look at stocks that are trading above the 20-day moving average, maybe I can't grab that number as stock charts just went down, but it's not a bearish number. It's not something where we look at and go, oh, wow, this is something troubling out there. One thing that I think is a little troubling is just some of the lagging in the IWM here today. But let's face it, the IWM is in absolute consolidation right here. Right there's no trend associated to it. It's in absolute consolidation, and so we're not talking about something where the Bears have major control, here of it, but also the Bulls are losing some of their grip that they've had over the small cap sector. So no real change there in the market vibe. It does threaten to go to neutral today and lose its bull signal with a neutral signal. That is the one thing that it threatens, but it doesn't look like it's going to trigger bearish here today, even with some of the selling that we've seen in the market here overall. And I believe, where's the market right now? It's down 5 points. Yeah, so down about 5 points here overall. And we saw the market vibe bull signal come in right back here, down here around 272. We're now sitting here up around 282. So it's been a nice bull run, and it didn't get whipsawed out back through here, and we may be in for one more of those bounces, at least from what the metrics kind of look like right here. Thanks for hopping on. Have yourselves a great evening, and we'll talk to you tomorrow. Take care.